my man was wearing this, I would be all over him.
Let me show you how to create an amazing ad using...
Oh, wow. That's good timing. Morning. You have a nice weekend. No. Uh-oh, we got an ad, I think. Here we go. Kill that. All right, well, let me mark this. All right, good morning. Happy Monday. Welcome to Forex.Today. Forex.Today. Welcome. Hey, 17,000 foreign exchange traders. That's pretty amazing. 17,000 foreign exchange traders. Good morning. So, what are we going to do today? Well, we got to go through the calendar. I thought maybe we could look at the commitment of traders report. We could also do some technical analysis. But generally on Monday, what we want to do is set up the rest of the week, set up the rest of the month, since it is the first day of February. So without further ado, let's get on with it. Let's go. So let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Therefore, please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I am a currency trader. I love currency trading. I love macroeconomics. I like global trade. I like capitalism. And we combine everything here every single day, Monday through Friday, here at the Forex.Today YouTube channel, but also on the Forex.Today Twitch channel, and also on the Forex.Today Facebook, all streaming live at the same time. Very cool. So please ask questions, get involved, and I'll do my best to address your questions. If I don't, it's because I'm trying my best to keep up with the chat. And often people ask quick questions and I give long answers. But the whole raison d'etre for me being here is not just to put you in a bunch of trades and give you a bunch of free trade signals to churn you. My goal here is actually to teach you how to trade properly. Okay, patience and discipline, conservative, repeatable trades based on not just technical analysis, but certainly using technical analysis, but based on fundamentals as well. But all of this really comes down to what do you want to do, and do you have the patience and discipline to actually carry out your trade strategy, or do you go, oh, look over there, let's go that way. Okay. So anyways, thank you for being here. Thank you for the positive energy you share every single day. And thank you to Traders Way for being part of our community as well. You're going to need a broker. Why don't you give Traders Way an opportunity to earn your loyalty and respect like they have done with me? Tradersway.com. You can have an ECN account, fixed spread account, variable spread account. Execution speed is fast, faster than most. And trust me, that is something that you want. And the swaps, nice. Tradersway.com. Oh, here's me. Oh my God, there's me. Look at that. That's almost a year ago. Look at that. That's interesting. Hang on, cleaning my glasses. So what I thought I would start with is the calendar and then the COT report. You guys good with that? Your customer says, hey, how does Chinese New Year affect everything? It slows the volume down. It lowers the volume. Is it important? Yes, it is important. Okay. How do you define risk on or risk off for a European session? the same way you do any session. Ow. All right. Take a look at the calendar. Take a look at the week. Now, we're in PMI season, so there's a lot of that going on. So let's take a look. You got ISM manufacturing today. We get an RBA interest rate decision. Of course, we talked about that last week. Okay, so let's go back with that. This is something that is critically important. RBA interest rate decision is supremely important. And on top of the actual announcement, it's really the statement. So I need you to download that statement and read it. They'll tell you what they're concerned about. They'll tell you what they're not concerned about or hopeful about. They'll try to give you some sort of outlook for the next 3 to 6 months. It'll be important. Not just if you trade Australian dollar. I mean, certainly if you trade the Australian dollar. But again, their research and analysis will be helpful for us to understand the entire global macroeconomic conditions that we're facing right now. Okay. European GDP tomorrow. Okay, great. Important. Yes. Game changer. No. Kiwi jobs. Yes. Very important. So you want to trade that late tomorrow, almost Wednesday, depending on where you are in the world. Governor Lowe out of Australia is also doing a speech about that same time. So right now what we're looking at is the Asian session today is important. The Asian session the day after that will be important as well. Wednesday, the big thing on the chart is ADP, another dumb prediction. Generally not a game changer, but certainly an opportunity to make some money based on volatility, aka scalping opportunity. Okay, it's a nice one. It's good. Okay. Heading out to Thursday. Oh, look at all of that Great British Pound, huh? So, are you going to start trading Great British Pound now? Tomorrow, or are you going to wait till Thursday? Okay. So Bank of England, interest rate decision, asset purchase facility discussion, monetary policy summary, Bank of England meeting minutes. Wowzer. Okay. Then, if that wasn't enough, yes, we have our weekly jobless claims and stuff. That's great. That's fine. And then you're able to, on Thursday, which is Friday morning in Asia, but Thursday night in America, you will be able to download the RBA monetary policy statement, which is, once again, supremely important. And if you've completed the fundamentals course at fxbootcamp.com, then you would understand exactly what they're talking about and how it will affect the currency, in particular, the value of the currency. And then Friday, I will be at FX Street doing non-farm payrolls live for, I don't know, the 180th month in a row, something like that. So that'll be on Friday. You see we got kitty cat jobs as well as U.S. jobs. Saturday, Chinese import-export data. Yeah. Very, very important. Okay? Import-export data. Now, of course, as part of GDP, that's your X minus M. Okay? We're interested, is China exporting enough? Okay, that will be another sort of sign about how well global demand is for Chinese manufactured goods and services. Okay, let's go on to the COT. Oh, maybe it's not even working anymore. It has been a while. Has been a while since I've been on this page. There we go. All right. Looks fine. Yep. Looks fine. The dates seem to be fine. So we'll just take a look at Euro here to see if there's any major change. So what I'm looking at, okay, first of all, you want to look at the net change. And there's a slight increase over time. Okay, so what I'm doing is I'm highlighting this area. Okay, so since the beginning of the year, there's slightly more, there's a slight increase in euro purchases, and it's pretty flat week over week. Longs are pretty steady. Okay. Shorts have come down and then recovered on the third week. Isn't that great? Now we even see it. I guess I should try it this way. Gotta make my marker a little thinner. But we see it here, which we discussed so many weeks ago. Then we even said the third week would be the false rally. And remember, we're backward looking. And I'm expecting generally this, but what I'm doing is I'm now I'm chipping away at the ice. Okay? So anyways, just to point out, everything that should be happening seems to be happening. Very cool, right? Cool. So now you can go through and you can do other currencies as well if you want. Okay. Cool. Close this. Sorry about that. All right. So let us move to, well, I guess we should start with the indices. Theta says, in what situation is commitment of traders the opposite of the market? It can't. It can't be. It is the market. It can never be the opposite of the market. It is the market. Those are the open positions. All right. So what I showed you is there's a reduction, but right? But anyways, yeah, you just go back. Just go back. All right. So yen weak, dollar strong. Very nice. Okay. So we expect dollar to be strong. But we also expect some sort of improvement in global macroeconomics over the next 9 to 12 weeks. The dollar is a seasonality issue, and even though there's good global macro, we expect dollar to be strong. It's quite a conundrum. I think it's pretty cool to talk about it all that time, for months really, and then it's happened. And you're like, wow, that's weird because it hasn't happened throughout the rest of the year, right? Like, it's weird. We don't typically see dollar and yen going in opposite directions, but in this time of period, we do, and it is. So that's kind of neat. So how do you play this? Well, you wait for the dollar. I mean, it could last a few more weeks, is what we're trying to say. So in your global macro play, you start with your yens, and then the dollar will catch up, and then your yens will flatten. Okay. What else is going on? A little bit of recovery in kitty cat. Aussie sort of meh. A little bit better on the Kiwi. Pound doing quite well. So, it's okay. It's not great. It's sort of mediocre. Slight risk on despite the strong dollar. So we'll take that, and now we'll look at commodities. And some sideways, some general up. Okay. So let's use this one here. So there's slight dollar movement bullishly, even though, okay, I think I said this backwards. There's slight bullishness in gold despite US dollar strength. Which shows you how nice that is. Right? Shows you how nice that is at I would assume some sort of macro level. Okay? So despite the dollar strength, gold is still doing what we'd hope it would do based on macro. Now, if you look here, what we've been talking about, okay? So if you were trading gold for the month of February, you've already had your opportunity and you're already done for the month. How does that make you feel inside? Okay. Then when the market opened, we were exactly 1850. And if you were an hour late, you missed it. Pretty important hour, huh? Yeah, right? But isn't that it? So and we've already talked about this, I don't know, 2, 3, 4 times, right? So I don't know. There's nothing much more for me to say because we covered it last week and the week before and, all this stuff. So right now, the target is 19. Okay? 19 on your way to 2,000. Okay? I don't know if we'll get there quickly, but that's still what you would be planning. One thing I thought we could talk about, I'm not XRP, even though it looks fun. The other fun one is this one. Take a look. Now, I heard a lot of news about this morning. It's the only thing Bloomberg wanted to talk about because it was like, oh, it's the retail traders. It's the retail traders. It's just like GameStop. And no. Now everything is overblown. Can you, right? Think about like the difference between GameStop and silver. I mean, they're not even close to being similar. But that was the big chatter, like, on Bloomberg this morning. I listened to it in the shower in the mornings. And typically it's just like, oh, this happened, that happened. Okay, great. It's just sort of like a part of the wake-up routine. And this today, they're like, oh my God, it's just like GameStop. It's the next new retail. I'm like, whoa, man. Whoa. But if it's even true, it doesn't seem, I mean, they're not remotely the same. You're not going to short squeeze silver. But if there's trades here, guys, then you can still put together, because you actually know technical analysis, okay? That you can start doing proper analysis, and maybe you'll have opportunities. Right here at $30, there's a pretty hard line set. We call that monthly R2. Super dangerous. Okay, super dangerous. It's one of these things like, if you had a fundamental bias, and I do know someone that holds physical silver, so there, I get calls and we talk about it from time to time. If you're buying silver because you believe central banks are trying to devalue their currencies to offset risks created from COVID-19 shutdowns, then there are very logical, dare I say, boring trades here. So you'd have to be a fool, in my opinion, to get all excited about it up here. It's just really, it's dumb. I can't think of another way of describing it. It's the opposite of what I teach and train. The boring trades here are just straightforward. The only question is whether you're a bull or not. And if you made these decisions, the trades are simpleton. And that's what I want you to do, is to do your research and make a decision, and then trade your analysis. And all this other stuff, I hope you don't get lured into it, because it will destroy all the good that I've created. And that is, you do research, you analyze what you find, you make a decision, and then you trade according to the decision you made. Okay? So there's a question here. Is it difficult to short squeeze silver because of the maturity in that market? Well, A, what short squeeze? And then B, is the silver market more liquid than some crappy stock that is in a business model that's dying? Yeah, there's a difference, bro. Okay, GameStop closed over 1,000 stores last year. It's a dog with fleas. Yeah, it's totally different. There's nothing even remotely similar. Okay? Now, the part that I like about the GameStop situation, it's an unintended consequence of government action. That's the part that I like. Okay? So a whole bunch of people with, let's pick on Robinhood. A bunch of people opened up Robinhood accounts. You can do it in just a few minutes. It's so loosey-goosey. It's amazing that it's even compliant. And especially with the advertising of it's free. I don't know. I never see their ads, but people tell me it's free. I'm like, nothing's free, bro. What is it, a charity? Right? There's a spread. You don't pay commission, so you pay a spread. I mean, dude, come on. So anyways, and then the government gives a whole bunch of people that don't need money. Whole bunch of people that don't need money get money. So what do they do with it? They're like, dude, the government just gave me $500. Why? Okay? Why? Something about COVID, blah, 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 blah. Millions of people in America that don't need the money got money. Didn't even ask for it. Money just showed up. So now they got their Robinhood account. They pump it with their free money from the government. And then they're like, I don't care if I lose this $500. It's not even my money. So they take that and they buy huge out-of-the-money options, leveraged to the hilt with money that they have that was free. All of this is like, it's not the fault of the trader. They shouldn't have had the money in the first place, but if you got free money and you're like, well, you could lose the 500, but you'll make 50,000 if you get this right. Oh, I'd much rather have 50,000 than 500. And I don't even need the 500, so whatever, right? So it promoted the degenerate gambling. It's a moral hazard. This is what bankers did when they got bailed out. Bank of America got bailed out in 2008. And what they did with it is the CEO remodeled his office and spent millions of free money, and they bought a jet or something like that. And the government's like, whoa, 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 right? There's this moral hazard where if you're going to get bailed out, or if you got free money, you can gamble it. It's not, I mean, right? So anyway, that's the part I kind of like, where there's always an unintended consequence of government action, and it's very rarely good. And so now we're seeing, 40,000 people, let's say, with free money from the government just took giant, ridiculously risky bets, all at the exact same time because they got free money from the government. That's funny to me. Now, the funnier part is people are going to rotate out of that and start doing a bunch of other crap, and it won't make sense, and they're going to lose it all anyways. Okay? So I'm not picking on Robinhood or anything like that. I'm not even picking on the traders. Like, why wouldn't you risk money that you got for free that you don't need? Sounds great. Shows you that you should only give the money to people that actually wanted it. But the government's incapable of doing such a thing. So there's no power to the retailers. Come on. A whole bunch of people took a degenerate gamble on a dog with flea stock that was ridiculously shorted. Okay, great. It made sense, that one thing, but if there's any truth to what Bloomberg is saying, and I don't doubt them, I just think they're kind of wrong. They're just not thinking out loud, or they're thinking out loud but not clearly. They see this and they say, oh, this is the retailers, but why can't it be a central bank? Right? Like, was it the retailers that bought it here? Was it the retailers that bought it here? Was it the retailers that bought it here? Was it the retailers? I mean, all of these are very basic, simpleton trades. There's no degenerate gambling going on here. This is how you buy silver. It's straightforward. So now they say, oh, well, is this? I mean, maybe it is retailers. Great, good. But they're not going to make returns like they did because there's no, I mean, look, it's up 10%, not 1,600%. Okay? Okay, Cash. Yeah, Cash. I'm not saying it's not, but what I'm saying is it's not going to go up 1,680%. Okay? You see? That's the argument. So it's, if people are rotating out, finding and it's being promoted through the media to like, this is the next one, it's just not going to work out that way, in my opinion. It's not the same. It's not even close to being the same. Okay? And if you're on it here because you did your job, or you're on it here because you did your job, you got paid, and that's really cool. Okay? Okay? But to do something now, I would lose respect for you, because you're chasing this weird, strange dream, and you're throwing out all the good. The patience, the discipline, it's all gone. Just like that. Okay? If you want to buy a dip, buy the dip. Buying it up there, I mean, come on, it's ridiculous. It's so bad. Cool, Cash. Well, I hope you're on it last week is what I'm saying, Cash. Cash money. Okay. Okay, let's start with, let's go left to right. Here's Aussie Dog. I'm on the 4 hour. Let's drop into the 1E. I'm in the 1E. And I have a okay trade, very mediocre, sort of first move. So last week we identified this area here. The market opened on the first hour of the new month. It opened at the central pivot. So I bought it at the psychological level of, I don't know, it was just below 80. Anyway, so I bought it here. My stop is just below the lowest low. It kind of went up. It kind of has not gone up. It's very mediocre, and I understand that. And one of the things we talked about last week, especially in the swing trading group, oops, I didn't mean to do that, was that it would be mediocre, and I know it's mediocre, and I'm okay with it being mediocre, because to me it's just sort of doing the job. My job isn't to make Hail Mary predictions, which I've done a lot recently, only as a way to entice you to learn. But I understand here that my job is to simply buy it because that's the right time and the right price to carry out my fundamental bias, right? My disclosure document says, I'll buy this, okay? That kind of thing, right? But I understand it's early, and it's probably too early, and it probably won't score. Okay? But you have to understand that if you're open, right, you should take the shot. Okay? That's all. It's a shot on net, and it probably won't go in. But there wasn't like, I don't know. I don't want to take the analogy too far, but like I could have passed. But in this case, pass means don't take the trade. Well, I had a good trade. It's an okay setup. It might not work. It probably won't work, but it might work. So I'll take the shot and I'll risk a little bit. The only thing it'll happen, the only negative consequence that could possibly happen is it ruins my winning percentage. But I don't care. Okay? So anyway, so I bought it. Within an hour, I was making money. And yeah. So, I don't know. Okay? Very mediocre. I'll probably get another chance. Now, the flip side of that, and this is your own decision-making process, is that you can say you would rather make the long-term buy down at 78.5. Therefore, you could sell this now to buy it later. What I was suggesting is, I'd buy it sort of down here, I would buy it down here, and I would buy it down here as well. Each one managed individually. And I wouldn't be shocked if we came down here. Great. Cool. Doesn't change the fact that this is still a bullish buy. Not just price, but time. Okay? Adam says Melvin Capital lost over 50%. Yeah, but you have to understand that they should. They're not where they, like, it's not that I'm saying being a short trader is bad, but the way they structured their situation was bad. They were over leveraged, under hedged, overexposed, degenerate gamblers that got caught. I'm telling you, there's going to be a day where you go all in and you're going to lose. That's what I'm teaching you. That the one day you're like, everything's perfect, I'm going all in, and you're freaking out inside because you put such a big Forex position on because you know you're so right, and that will be the end. It will not work for you. It will fail. And Melvin kind of did that, where there were lots of people shorting, and then more people shorted, and then a company like Melvin goes in and does the biggest short of them all. Good. Fail. They had already failed, in my opinion. The worst outcome is that they would have made giant money, but whatever. So I'm glad. Good. It's worse, however, if the government bails them out. So Melvin Capital does it, and they lose 50%. All their clients will leave. Okay? But if Bank of America does it, they'll get bailed out. That's the moral hazard. Okay? That's the moral hazard. And that one I have a problem with. Okay? So, good. They lost 50%. Good. Happy for them. Good. Because I'm telling you, and I know this is not popular, but you don't want any of this. That is not what you want. Get rich is bad. The whole idea. So even the media talking about it. So a whole bunch of people did something and got rich overnight on GameStop. I mean, it's interesting and it's fun. You're like, holy crap, really? But now I'm worried that suddenly millions of people around the world are thinking this way, and it's really a disservice. It's really, really a disservice. So I would rather you, if you're trading silver like I showed you, take the boring, logical, intelligent trades based on fundamental and technical analysis. Those setups were so ridiculously straightforward that it looks like a textbook. I want you to trade as boring as you possibly can, because you've thought so much about it and you did so much research and you're so conservative and you wait for such great setups because you're so patient and so disciplined. People would look at you and say, man, you're boring. That's what I want for you. Okay? Rookie says there will be losers. What we're not reading about in the media is everybody that's losing. And trust me, there are plenty of people. So, I want something better for you. If you didn't plan it last week, you don't deserve it now. All right. So, going back to this, and then we'll move on. This is very, very highly possible. And in fact, I would almost want that to happen. Okay? I'd say there's a very good chance that that's what's going to happen. But I'm long here. Yeah, because it's a trade. That's a bullish trade all day long. And if it doesn't work out, I'm okay with that. I have an opportunity to make money, and I cannot lose money. My stop is at break even. So maybe cannot, but is not the right words because anything can happen. That could get gapped and all kinds of things. But my stop is at -3. So a reasonable risk now is I lose 3 pips or I make 300. Cool. Boring. And if it comes down here, maybe down here for sure. Simple technical analysis at that point. We could take a look at euro, and I think dollar's going to gain strength. So euro's going to lose value. Meanwhile, ECB wants the euro to lose value. So on the short run, I'm actually a bear on euro, but on the long run, I'm a bull to the chagrin of the ECB. So even though there was a setup on euro, I ignored it. Okay? Because I made the decision fundamentally that I'm not very interested right now. Maybe later in the year, but based on seasonality, I'm skipping the euro yen, and that's why I'm not on it. Cool. Now I move over to Kiwi, and I am on Kiwi. Okay? And then you're like, whoa, 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 whoa. What's going on here? What's going on? So we have to switch things up a little bit. Okay. Is it good month on the monthly? So we go position trading bullish. Okay. Is it good here? It's not bad. You can see that, right, I caught a dip down towards the monthly. But it's not a good monthly trade, is it? So what was it? So now you go to template. Instead, let's look at the swing trades from a bullish point of view. Okay? And you'll see, because remember the spread's above my actual entry, I bought it just above the psychological level of 75, which is a weekly central pivot, 4-hour, 21, slightly above the monthly central pivot. So good enough for the girls I go with, and within the hour, I was profitable, and now I'm hoping that this maintains. No, that's not what I wanted. Hang on. Maintains upward momentum, which is a big fancy way of saying I hope it goes up from here. Okay. Okay. 1, 2, 3. Now, if it fails, which it probably will, I might just try again. Okay. So now I go back to say, well, let's take a look at how many opportunities I'll have to try again. Well, if it came down a little lower, I'm okay with that. Okay. If it came down a little lower, 74, 84, okay. I could buy it as low as 74 and a half. Okay. And then, of course, if we have a big bearish move, I could buy it as low as 73 and a half to 73. So that gives me a lot of options depending on the price action. Remember, throughout the month of February, the fundamentals will not change. Okay? Okay? So, like, this is basically what I'm on. Here's plan B. I'll do it in a slightly different color. Okay? Nothing fundamental will change. And then the other one could be it does this, in which I would then buy it down here. So I break it down to what do I have now? Do I have an opportunity in front of me? And because it's a basic swing trade that I took Sunday afternoon when the market opened, that's all I consider it is plan A. The fundamentals are up, but I don't know if it's going to go up. That's not my prediction for the moment. The prediction is this year, this will probably go up. So what do I do now? Well, I got a weekly swing, which might set up for a monthly swing. I know the seasonality is mediocre, but I'd rather be shorting yen right now than dollar. So I open this up, I got my price, the time is fine, take a shot, and I'm done. Okay? If it comes down here, well, I'll be out, and I'll lose a little bit of money. That's okay. That's okay. Okay. Yes, with Chinese New Year, will it affect trading the odd? Aussie? Well, less market participants is less good. Will it affect, will it make Aussie dollar drop or fall? No, but maybe if it's destined to fall, it won't fall as fast. If it's destined to rise, but if nobody's trading, it doesn't add volatility up, nor does it add volatility down. There's just less. So it's, right? Okay? But if there was going to be normally a demand for China to buy iron ore on a typical week, but this week the iron ore people are done because they're on holiday, then we won't have that. Okay? We won't have that. But that might be interesting when they come back from holidays. And I know it's a long holiday. Then maybe there's pent-up demand. But, you have to understand, we all know it's coming, right? It's like Christmas. It's not a surprise. And everybody, all market participants, whether it's retail or manufacturing or services, they plan for it. And so, for example, if China normally needs a certain amount of iron ore and coal to maintain their economy, and they know there's holidays coming up and that they could draw down their inventories, that they would just plan that in their inventory purchasing. It'd be normal, right? So I ultimately, I don't think it's going to lead to a giant positive move or a giant negative move. We'll just have less market participants. And what that could mean is you might pay 0.1 pip more because there'll be less market participants, so spreads would widen, but probably not noticeably. Okay? All right, so let's move over to some exotics. And once again, I did an example where I stayed away from USD because I believe USD is relatively strong. And while dollar strong, euro will weaken. So I took the euro. And let me dive in here. Okay. The first hour of the first day of the new month, I shorted here on the central pivot point. And I have since moved my stop to -3. And I know on the long run, this is the mediocre trade. So now there's two. I'm short up here, 1865, short here at 1837. And the target currently is 18. Isn't that neat? Okay, and I'll remind you when we started taking these trades, this is the mediocre one. Currently, euro will be weak based on seasonality of the USD. In 6 to 12 weeks, it will not be the case. Things will change. And this, but only for euro, but not for rand. So this could just be sideways to down. Slightly down, lots of upward pressure, but lots of downward pressure. Ebb and flow, ebb and flow, ebb and flow. But this pays 30% a month. Interest. So that's fine. Are you guys okay with 30% interest per month? Oh, Greg says, what about Japanese pension flow, retooling, tax repatriation? That's not yet. That's early. You're too early for that. That'll happen more like in 12 weeks when I rotate out a dollar strength into yen strength. Okay? Then the opposite trades will, I'd rather short USD Rand, 6 to 8 to 12 weeks from now than Euro Rand. So I'll rotate out of that. Okay? Theta says, but if I built my trade based on fundamentals and opened in the right place to enter a trade and then it moves against me, well, you get stopped out. That's why you have stop losses. Cash says, I notice you're focused on the weekly, not the monthlies. Well, they typically are the same. The first week and the first month are very similar, right? Cash says, Japanese yen fiscal year is March 31st. Yes. So not 12 weeks, Wayne. Well, what is it? 8? I've been saying 8 to 12. So, but yes, I know when it is. So what is that? February and March. So that's 2 months. So is that 8 weeks? Okay. But I'm setting sort of a process here. Okay. The bottom line is it's early. Yeah. Okay, that's cool. Yeah, it's 8 weeks, but you have to understand it's not an event-driven strategy. It's not like it's 8 weeks, 3 days, and 21 hours. It's a process of flow. So it's just a bit early. I'm not expecting that strength yet, but it's going to happen. Sure. Okay? Right? Okay. Would I re-enter? Well, look, if I was worried about this, then I wouldn't have moved my stop. Okay. Nothing worse than taking the same trade 5 times. Okay? Although your broker will like it. So what did we do? So we did some commodities. We did some exotics. We did some dollars. We did some yens. We did gold and silver. So how about... Right? Yeah, Cash, that would be like the last Friday of the month. I mean, it makes sense, right? Anyways, what would you like me to cover? Yeah, pound. We already know pound is strong. And we already know dollar strong, and we know yen is weak, so, right? But, yeah, we can look at those. But, right? So not much we could do on a monthly. So that sets us out for an out of position trade, right? And we know even on a OPP, let's do it weekly. But let's do it weekly just to make sure. See, they're essentially the same. We need the 4-hour 21, right? So that's why, like, last night, I look at it and I'm like, not interested. I know it's going up. That's not my issue. My issue is I don't have the right price. Okay? This was beautiful. There's your Thursday front run. So it opens up Sunday here. Well, typically you would want to buy here, except we know it's not likely to hit that. And we also know that when you're OP, you got to kick off the 4-hour 21 and then set up the counter trend trade and all that. And I'm just like, I'm not really interested. Okay. Okay. Well, that's what that says, right? So that's straight out of the course. Oops, let me get rid of this. So you would want to look at this, let's say, with normal pivots. So let's just do weekly pivots here. And what it says is it's going to go up to 145 and then drop like a ton of bricks. So I just like, it's a pass for me. Another way of thinking about it is it's set up for a bear, not a bull. Now, I don't think it will fall straight, so I think what could happen is this. At least that's what bears are going to try. And we won't know until there's a proper test. And the proper test is like the only thing helpful for a bull right now is this. The kicking off the future 21. Okay? But I'm not really interested in out of position trades. So if I were trading this with price action would tell me the much better price is like 142.5, maybe 143. So I'm just not interested at 144 and change, right? So that's why I skipped this last night, where I'm like, dude, this is 100 pips out of position, not interested. So it's not that it has to counter trend or something. It's just, it's too expensive. It's 100 pips out of position. So maybe if it dropped off of here, if I'm very aggressive, but we also know that sets up a counter trend up here, right? Straight out of the training course. So whether it's true or not, we don't know. But my thought process is even if bulls buy it because they're ridiculously aggressive, which is fine, then they're, right? I still don't want to buy it at 44 because it's probably going to drop down to 43. And then it's right, and then it's going to rally up to 45, and then they're all going to bail. And guess what? Now we're set for March, maybe, right? Because we expect by the middle of February to the end of March a rotation out of, let's say, the dollar strength into the yen strength. Okay. Now, Alton said pound is going to drop this week. Yeah, but you wouldn't, right? This would be this would be almost recklessly aggressive. But if you saw something like this, okay, or something like this, it would be much more conservative. It would be less gambling and more of you saying, okay, for whatever reason, you believe the Great British Pound is going to fall this week. So now you need to set it up. Selling it here, selling an uptrend is always like, I mean, it's silly. Okay, this is profit taking, not selling. So selling up here above the 21 in an uptrend is just, it's unnecessarily aggressive. It's just unnecessary. So if you drop to the 55, then you'd set up a double top. And if you got the double top, then you're going to take the lower low, lower high, okay? And now you got technicals to back you up. So the one shot off the top, I'm not really, again, it's ugly. That's an ugly trade. It's still bullish. Bulls are still likely to try this. And then I know, based on what I see here, that there's going to be profit taking. So at least that would be the out. And the out could create the counter trend. Depends if it happens today or tomorrow versus the end of the week. That's the difference. Okay? Okay. Sultan says January up, February down. That might be true. I'm not confirming or denying that. But you have to put that together technically. Okay? Okay. Okay. You took the sell bid of the stop loss. It doesn't matter to me. It doesn't matter. It's just, I wouldn't want to see it. Like, if you were working for me and you took trades like that, I'd probably fire you. Now, you can do it with your money, and it's fine. And you'll say, oh, well, in a different time frame, or Wayne, I jammed a stop. All that is great. That's fine. You made a personal decision. But if you were trading client money that way, I'd have to fire you. I'm not interested in alpha created that way. That's not alpha to me. It's a counter trend. I don't want counter trend trading. Okay? Now, like, let's maybe explore that a little more, and maybe I'm being overly conservative. So let's say, like with Meta, if I said, Meta, you have to be selling pound yen, could there be a conservative way? Could there be an argument like, because you're already bearish anyways, hang on. Could this be acceptable? I guess what were you trading? So you traded a double top London Open, lower low, lower high type trade? Okay. And you'll probably take this one in the future, right? Okay. Yeah. Okay. All right. I wouldn't like it, but I get it. I get it. I wouldn't like it, but I get it. Yeah. Okay. So I'll take that back. Okay. So we're stuck in a situation like this. So what's the next move then? Okay. Yeah. Yeah. No. I wouldn't fire you. It would. In the situation where I made you a bear, I guess it's different from people making decisions, let's say, as day traders, as intraday traders, right? If you were a portfolio manager and you were set short, so you were Japanese yen long, or right, or something, or pound yen, like specifically pound yen short only fund, then yeah, okay, then that's a different scenario. if you were trading a top market open, right? Market open, double top, lower low, lower high. But most people are not capable of doing all of that right now. No, you probably are, but most people are not. And we would both know, okay, so you're a portfolio manager and I'm the fund manager. We would both know that the probability of that working is fairly low, but we both know that we both know. Like, it's common knowledge in that sense that you're doing it because it exists. You're taking a shot on net, but it's probably not going to score. But it's your job to take the shot. So we would both get that. Now, what I was saying before had to be more like analyzing that if that's a good trade or not. It's not a good trade. But it's going to some degree probably have some impact. And it might work. It might go in. So in that case, yeah, you could take it. But most people are like, And if you took it and then you jammed your stop or you took your profit, I mean, it's such a mediocre trade. And I can't imagine, I mean, what was it, 50 pips? Okay, so you made 50 pips. But there's probably easier things for you to be doing. Right? That's what it always comes down to, guys. It's relative. Relative. If you're doing such technically focused trades, I would rather you not do it counter trend. If you just did, if you were that good, I would rather you'd be that good trending. Because you'll make twice as much money. You'll make 3 times more money with less risk because you're not betting against the entire world. If you if you had the job of only selling this, I would understand it, and I wouldn't expect it to work, but I understand what you're doing. But you'd have to be a really good trader to do it properly. And then, of course, knowing that this would be significantly the better trade. And even then, we're probably only going to go down here and the bulls are going to buy it back. So there's a lot going on here. And I would rather you stay away from the mediocre trades. But but sometimes it's your job. You're hedging the firm, okay, by taking these actions. But you have to be really good and know the context of what you're doing, not just that you're doing it, right? Cool. Thank you, June. Well, it's not the contrarian part that I'm even really, truly interested in. There will be a time pound yen will come down hard. And I know that that's what you want to do. And that when those market conditions set up, you're going to do very well. So that's why it's a different scenario where it's not a perfect setup, but we don't always have perfect setups. But if you're doing what you intended to do by design, that's a much bigger, that's much different than from what was being presented to me as someone had made the decision today to be a seller. And like, whoa, that's dangerous. Making a decision today to be selling this is dangerous. That's not what that short trade would be, because it is an uptrend. So by design, it's not a good trade, right? It's just not a good trade. But if that's what you were designed to do, like, for example, you would take this trade, and that would be a good trade, even though it probably won't work out. So taking this trade is a little dangerous. It's not so perfect off the pivot and stuff. But I get it. I get the setup. But we also know that in this trade, you're supposed to buy the 4-hour 21. And that will probably be what happens. And then what'll happen is it'll come up, and then maybe tomorrow we hit 145. And then all bulls should exit, and that will create this downward move towards the central. And the cool thing is, Maida, I know you have the discipline where you'll take this shot and maybe make a small profit or get knocked out or break even, and then you'll take a shot up here as well, and you'll catch that. And eventually, whether it's today, next week, next month, you'll be well on your way on this downward move because you're analyzing all of these opportunities and you're taking shots. Like, this is a shot, this is a shot, this is a shot, this is a shot, this is a shot. Okay, and now you're doing a double top. Okay, great. But we still don't have bearish market conditions. So that's why you got to be very good and very conservative as a bear in an uptrend. I mean, you got to be trading almost frightened. But then when the market turns from bullish to bearish, that's when you're strong. That's when you come in confident. That's when you come in and do more, right? So it's difficult. It's difficult. And I want most people, especially the newer people to our channel and stuff, where I say, look, dude, this is up. So if you're selling high off the top, it's a dumb trade. But if you're set fundamentally bearish now, which is a whole different thing, and you're tiptoeing through minefield, then it's a much different thing. Okay? Because you know what to do and how to do it and how to handle it. Knowing that right. As long as you know it's a minefield, you'll be different, right? Yeah. Well, so therefore you got to be careful, right? So if I was a bull, I would say, oh, this is out of position, OOP, and we'll kick off the 4-hour 21, and not the current one, the future one. But I've done all of this in the training course, right? So anyone that's gone through swing trading would know all of this, and it right? And set up what is more probable. But if you're one of the best, you'll still take that first shot knowing that you probably won't score. But boy, most people are not that good yet. Very few are. Okay? Okay? But I'd say if we're up here tomorrow, then by NFP we'll be back here at 43. Right? That's what I think is probably going to happen. Cool. All right. Oh, Kiwi not working out. What? Yeah. So that's a great example too. But let's look at this. It's not a good trade for a few reasons. One, you can see I have it marked. Essentially, it's a double top. Okay. We know bears are going to sell it there. You see that? But that's why as a bull I bought it low. And what needs to happen here is down to the 4-hour 21 and up. Okay? But we know this is where bears would sell. Okay? So it comes down to whether they did it or not. And that would lead to yen strength, which wouldn't be shocking this time of year and all that kind of stuff, right? So that's why I say emotionally you got to be okay with January and February being mediocre return-wise. It's the beta. It's okay making 2% in January, making 2% February. It's not okay making 2% in November, right? So we're going through these ebb and flows. And that's the challenging part of this time of year. Okay? Bears will sell here on a monthly. Bulls will buy here on a weekly. Bulls will buy lower on a monthly. Bulls will buy lower on a monthly. And I'm stuck here on a weekly trade, so I can lose on this trade. But understanding that is most important. But it might just work out where it does move on the weekly. Okay? And I'm exposed. Good. I'm in. Got to be in it to win it. Okay. Emmanuel says, what is the most profitable pair to buy or sell today? Well, if you want to use past performance, which does not predict future results, but I can tell you what has probably produced the best trade. You'd say, well, yen seems very weak and Swiss seems very weak. Okay. Pound was strong. So I would look at this, and according to this, probably USD Swiss franc long. Okay. Maybe CAD Swissy. So you would go to like maybe this, but it's too late. You can't enter that trade anymore. It's done. What was the other one? CAD Swiss franc. That's pissy. CAD. I don't even know if I have a CAD Swiss franc. I guess we'll move this one. Okay. But the problem with thinking this way, CAD Swiss franc, is that it's already happened. Okay. So to Emmanuel that's asking which is the most profitable pair to buy or sell today, that's a relative strength question. So you should do relative strength analysis. So CAD Swissy looks pretty good, but I'd argue when you back out that it's a pretty mediocre trade anyways. They must have some sort of correlation. Okay. Miguel says, how do I use those indices? Well, I just showed you it's relative strength. Dollar is stronger than Swiss franc, so clearly USD Swiss franc's going up. Dollar stronger than yen, so clearly USD JPY is going up. CAD and dollar are both strong. You'd be foolish to be trading them today, based on what has happened in the recent past, but that does not predict what's going to happen in the future. And therefore, that's why I don't actually trade relative strength. I know how to do it, and I used to do it manually, of course. And before manually, I actually did it on Excel spreadsheets. But what I do to be more predictive, because remember, this is what has already happened over the last few hours, few days, I try to say, well, what's going to happen by the end of the year? For that, that's fundamental analysis. I look at macroeconomics. And so I'll say, generally speaking, I want the dollar to be weak, but right now it's strong. So I'm not really interested in looking for those trades today, maybe tomorrow. But JPY looks all right because I also want that to be weak. So that's why I'm long, what was a Kiwi and Aussie versus yen, because they were swing trades. Okay. All right, Wayne, quick technical question. When you're front running a weekly swing, the R1 and S1 are still moving? Yes. So how do you manage your stop loss? The best I can. Right? Best I can. Where's the monthly? Where's the daily? Where is the weekly? Where's the price action? Where's the psych level? Right? But remember, let's say I'm a bull in your scenario and I want to buy and I put the stop and the stop is still fluid. I'm buying what should be moving up. Okay? Yeah, I'm not mechanical. You have to understand that. I don't even look where the R and S ones are. I know they're important, and I know my stop shouldn't be so close that, a butterfly flaps its wings and I get stopped out. Right? But most of the time my stop is at least 50 pips away. At least. So it's like more than enough is a good start. I'm not going to get knocked out of a trade because I was unlucky or unfortunate or a piece of news came out. I have to be wrong. I'm trying to remove luck as much as I possibly can. Right? So for me I want to document that I'm completely wrong through a loss. That's why my losses are not tiny per se. I want a good loss. If I'm wrong, I want to be wrong, not unlucky. So any loss is going to read like -50, -70, -100, okay? That's fine. Those are good losses where I didn't get unlucky because something moved against me for a bit of time. I was very, very wrong. Now, all the other losses are going to be like -3. Why? Well, they broke even. But I'm not going to count a break even as a winner. That's where it's so funny to me when people do that. They're so concerned about their winning percentage. They'll say, look, I made 3 pips. That's a winner. You took the risk and you made $3 or $30 or $300, whatever it is. You risked thousands and thousands and you made 300 and you call that a winner? It's not a winner. It's a loser. Okay? So I would never take a trade and take 3 pips and call that a winner. So I put it -3 because I want to document it as an unsuccessful trade. I did not make a trade to be -3. I didn't make a trade to make +3. So I will document it as a loser. Okay? That's how I do it. So I would, the way I would design your trading history, for example, excuse me, the way I teach you is that, excuse me, I want your trade history to look like -3, -3, -3, -3, -3, -3, -66, -3, -3, -3, -33, -3, -33, -3. That's what I want to see when I look at your trading history. When you're wrong, you bought a beautiful swing trade setup and it completely collapsed on you because it turned bearish. Good. Take the loss. Not your fault. Good trade. Okay? Then what you'll find is maybe you can improve some of these -3s. Maybe you move them too quickly. Maybe you don't, but we could look at it. Okay? We would address why there's so many -3s. But remember, your winners should look like +100, +200, +300. Okay? Yeah, theta, that'd be right. Okay? So imagine now if you had the -3, -3, -3, -3, -3, -33, -3. When you average it all out, your average loss gets smaller and smaller and smaller. And when you average out your winners, they get bigger and bigger and bigger. Because you don't have any pissy little winners. You would never want to take plus 12 profit. Okay? So what happens is your average winner is very big and your average loser is very small. Therefore, your risk-reward ratio is very favorable and attractive. Okay? The way I teach is that your value creation is through your research and your analysis. And your trades should be worth more. It's what we focus on. The universal truths. Keep your losers small. Let all your winners run. Well, the only way you can let your winners run is that your trade planning is better. If you make 20 pips, there's no trade plan there. There's no fundamental analysis. There's no seasonality. There's no macro. There's nothing there. It's just a wave in the ocean. There's no current, right? There's just nothing. If your trades were worth more, it's because you have an idea where the currents are going. You can put your raft, you can put your boat out to sea and go thousands of miles with the current and the trade winds versus just someone out there doing just splashing in the waves, making a mess of things. Okay. So anyways. All right, so the stock market's open, and I'm gonna jump, babe. It was real. Thank you for being part of the Forex.Today community. If you need more training, if you are interested in fundamental analysis, scalping, day trading, swing trading, all of that is available at fxbootcamp.com. The link is in the description below. If you need a broker, let Traders Way earn your loyalty and respect, as they have earned mine. Visit tradersway.com, open up a demo account. Try an ECN account. You just might like it. So peace on earth. May the pips be with you. May your profits be above average. I'll see you on Tuesday. I'll see you on Wednesday. And I'll see you on Thursday here. And also, then on Friday, I'll be at the FX Street YouTube channel for that. So thank you for clicking the thumbs up, likey buttons. And I'll see you tomorrow. Cheers.